What's up, guys? It's Isaac here, and today we're gonna have another little conversation, a little chit chat, talk about the market, talk about what's going on. Now, if you guys have been following on the website, you know I've really been looking to long the British pound over the yen and the British pound over the franc. And, you know, I've outlined why. Basically, pretty basic central bank divergence going on. You know, the pound is going to be hiking rates probably coming in May. They're probably going to hike them again in February of 19. And, you know, you want to be in way before that. And then if you look at, basically, and the reason they're doing that is their inflation target's 2%. It's at 2.7 right now. Wage earnings keeps increasing. Growth keeps going well. So the inflation's going to keep going up. So they got to start hiking rates to kind of curb it down. Try to slow down the economy a bit so it doesn't overheat. And then meanwhile, if you look at the Bank of Japan, you know, they were saying earlier this year that we're going to cut QE in September. You know, once inflation gets to 2% and stabilizes. Well, you know, here we are in April. Inflation's at like 1.5%, I think the last time I checked. So, you know, they still have a whole 0.5% to go just till they get to 2%. And again, the bank said, hey, it's not like once we hit 2%, we're just shutting the QE off and bringing rates back into the positive territory again. Said, no, it's got to stabilize. Then we'll wind QE down. Then we'll start to bring the rates up. So, you know, the yen has got a lot of stuff ahead of it before it's really like a bullish currency. I get everyone, you know, all the, oh, it's a safe haven, the risk off, whatever, all this kind of stuff. But, I mean, you know, that only will last so long, that trend. That's like a very sentiment thing, this risk off, risk on thing. And if you read headlines, it literally changes every day, you know. Like literally with the Syria bombings this weekend, you know, from Friday, within a span of 3 hours, there's articles on Reuters, you know, Bloomberg, Wall Street Journal, saying, you know, the dollar firms up as people are scared of Syria, you know, or whatever, bombing them. 2 hours later, the dollar, you know, sinks as fears go away, or, you know, so the risk on, risk off because of war, you know, money going in and out of the currency, it's, you know, it's more of a sentiment thing. It's not going to play out. It's not going to beat the longer term trend of the central bank, you know, planning years out, figuring out what the hell are we going to do to make sure the economy isn't overheating in 2019, you know. That's enough on that. That's my thing on that. Really not worrying about the risk on, risk off stuff with that currency. And then, like I said, the other one I think really good to buy it against is the franc because, you know, their central bank kind of policies and stuff right now are also very divergent from the Bank of England's. Their inflation's at like 0.8%. They want it to be at 0.2, just like basically everybody. You know, everybody's looking for that 2% sweet spot. They're at 0.8, and their rates are currently negative 0.75%. And the bank themselves has said, we're going to keep them there till at least 2020 when we're hoping inflation will be 2%. So, I mean, look at this, guys. We got 2 years the bank is expecting, you know, they want to keep things in a situation where inflation can rise for the next 2 years, which means a weak currency is going to help. And so on top of keeping the rates negative, they've said, you know, we're going to continue to be active in the market and basically short the hell out of the franc anytime it spikes because that's not going to help us reach our target. Now, they're not going to throw some peg up like they did, but you can bet the franc is not going to run away just on a crazy bull run. It's not going to happen. The bank won't let it happen. And especially against the pound where rates are raising, inflation's going up. The bank, you know, the three banks, the BOE, the BOJ, and the SMB, they got totally different problems right now. These guys are like, oh crap, our inflation's low. It's been low. I mean, we've been stuck with negative rates almost since like '08. My God, we've been in a recession forever. We got to get this inflation up to our target. I mean, Jesus. And the Bank of England is sitting over here saying, okay, yeah, we've been moving and grooving since like, I believe March of 17, I think. Moving and grooving above 2% inflation. They're looking good. It's at 2.7, and now they're like, wait, They were like, oh, maybe we can cut rates. They cut them. Oh, no, that didn't work out. Bring them back up because the inflation started to take off again. So they got to bring them back up, and the inflation's still going, and they need to stop it, So they got two different problems. They're going to be doing two different types of monetary policy to solve them. And, basically the day, any kind of day-to-day return is going to be random. But with these kind of things going on, the central banks actively creating policies that will govern the market is going to create a skew and a drift towards to the distribution of the returns. So basically, you want to accumulate. You don't just go all in on one pair, buy it up, say, okay, sit tight and ride it to the moon or anything. But you want to just, start accumulating on dips and take a little bit of profit when it bounces and accumulate some more orders on the dip. But, that's about all I have for today. Let me know if you are shorting, the pound against the franc or the yen. Let me know where you're getting in and when you're getting out. Because if you're shorting the pound against the franc, woo, you're going to lose your shirt, buddy. But enough of that. Hope everyone has a good day. Make sure to check out the website. Basically, the reason you want to look at the website is if you look at the Wall Street Journal or Bloomberg or Reuters, their currency news sections, they're freaking horrible, and they're not archived at all in any organized fashion where you can really search for, oh, what's going on with the euro, what's going on with this. It's just like a list of 20 headlines, and you can't see the past headlines. You can only see what they're showing there, and unless you're just constantly looking at it, you don't have a record of it. So we basically aggregate it all and make it searchable so you can kind of find what you're looking for. So be sure to check out the website. Anytime they upload any news on there, we will put it on our website, linking back to it. You read the article on their website. We're not stealing their content or anything. We're basically trying to send traffic to them. And, maybe they'll organize their website better someday. But be sure to check it out, shutterlake.com. And thanks for watching this video. If you like, subscribe. Hope to see you next time.